or could be this one as well, right? Could be this one, or you just mark out everything here. But in the case of you understanding QM how, yeah, you know that this was the last bearish candle before this bullish movement, yeah, and that is your POI. Then what do? You have your buy position. That is now your POI. And what comes next? Your entry. What comes next? Your entry. And then your target could be the next eye, or your whatever target it is, or the target the next eye. Because originally, this is what you are looking out for. A sweep of this low, then a break of the previous high, the previous lower high. Then what? This. Either this type of liquidity. We have two types of structural liquidity. This is the first one, and this is the second one. It happens before the break of structure. If you go back to structural liquidity video, you will see it there, right? So either you have this or you have this.
I'm not so much of the person that wants to be outside.
Right, then what do you expect? Now you have your POI right here. You have your POI, which is, what's the POI? This is the last bearish candle.
I was not going to be around.
Okay, it's not even the last bearish candle. Let's assume that this is the last bearish candle, yeah?
Exactly.
That's the last bearish candle, and that's your POI. The last bearish candle before this bullish movement, yeah? That's your POI, your POI, you know, your QMR POI, you know, you have your entry there, the stop loss, and your target, whatever it is you want to target want to be, and then that's it. You have your trade entry. Then you wait.
Alright guys, my name is Ayobami. Why is this thing echoing so much? Is it not echoing? Is there way too much? Okay, my name is Ayobami, and I'm not sure.
Boom.
Do people see it when they are?
That's it.
Yes. Okay.
And your target hits here. Now, if you take a good look at this, say we have this, and this is the break of structure, yeah? Now we can see that our liquidity is right inside the 50%. It's within the 50%, yeah, inside the 50%, and our POI is very close to it as well. And what validates our POI? Liquidity. And you can see it. You can see that. Now, why didn't we use this zone instead? Because this is a low. This is like the first low after this 50%. Which is the reason why we didn't use this one as our POI instead, yeah? This is why we consider it our liquidity, because obviously this is the last low. This is a low, but this is also the last low. This is structural liquidity. What's structural liquidity? So structural liquidity is the last low before the main low. And obviously, yeah, this is the last low before this main low here, right? And you can see how we had the trade. Now, the same thing on, let's use Euro GBP. This is Euro GBP. Let's use the...
I went to even Mozart Institute. I went to.
All right, on the 4-hour time frame. Now, on the 4-hour time frame, or did you use 2 or 1?
When
I remember I caught a buy live with you guys last week. Was it 2 weeks ago? Yeah, beginning of the week. Yeah. Now let's look at it. Now this is the interesting part of this stuff here. This is the very, very interesting aspect of trading here. Of considering your, your swing structure. It's a very, very interesting aspect of considering your swing structure. Now you can see, look at something. You can see we have a sweep of this low at this zone here. We have a sweep of this low of the previous low, and we have a break of. You see, this is actually very obvious, yeah. Price took out this previous lower high, right? Or higher high, because it's actually a bullish movement already. Price took out the previous higher high, price took it out. Price came down again. Now that means that originally this low is protected, it's expected to be protected. But now we have another one. We have another sweep
I was in that
and
this morning.
another break. Does that make this low protected? So now let's look at the reason why this low won't be protected, why this low is the structural liquidity for this one instead of this one. And let's look at that. Now we have this sweep, we have this break. Let's consider, this is where the money is, right? Now what did I say? Okay, let us say, now we should we say this is our PO high?
So I have so
you can see this QMR, right, is not inside the 50%. It's inside the discount zone, right? You can see, we can see it's very, very obvious here. It's not inside it. So let's assume this would be, this other block here would be the POI instead. Remember I said your POI must always be inside here, and your liquidity must what? Be either on top of this 50% or below the 50%, right? Now, you can't use this guy because this liquidity is very far away. It's very, very far away. It's not on the 50% and it's not inside it. And this is the only POI that is here because this guy is not also down. So let's now bring this one here now.
I don't even have a degree like most of you.
You can see this structural liquidity here, and this is our PO high. You can see it was, this was a sweep here, and this was the guy that was swept. Now you can see the distance between this guy and this guy here. You can see it's quite very, very close. It's still very, very close. So I'd rather consider this one as my PO high and have price come there instead. On the 4-hour time frame, let's look at it.
Every Saturday, every Friday, there's no training.
The 4-hour time frame, let's look at it. On the 4-hour time frame, what do we have? We have another major break here, which confirms that okay, price is bullish, right? But where will price come back to before we have, the continuation of the trade? But where will price come back to? We all like the 4-hour time frame says price is bullish already, right? Price is obviously bullish. But where will price come back to? Now we are not now guessing at this point. We are not guessing if price will come here or not, if this will be our POI or not. We are not actually guessing because on a normal day we could say we have this sweep, we have this break. We could say this is actually our last low. This is our structural liquidity. But price doesn't always have to come to this zone, because we now have another sweep here. We now have another swing structure here. And what do I mean? You could have scenarios like this, where you have something like this, you have this break, then you have price like this, gives another sweep, another break, another sweep, another break, then this, then this. Could have price do something like this, right? On a normal day, this is supposed to be your last low, which is a structural liquidity. The reason why this will not be a structural liquidity is because you already have this.
We've trained over 20 to 25,000 people.
Right, which makes this low structural liquidity, and price will now go what? Come down here and go. And let's look at, I hope I'm not actually confusing you guys. Don't worry, you will get it. I will still come back to that.
Or should I say, you get a brief history about myself. Let's do it like that. The story is not interesting as it is.
All right.
Even in real estate.
And boom, you have that. Now you are not actually guessing. In a scenario like this, you are not guessing, right? You're not guessing because you've seen, you're able to tell a story that okay, look at this on this 1 hour time frame. Aside from this particular sweep, there is no other sweep I can actually say makes sense here. This is not a sweep. It's not a valid sweep because there's no valid break here. It's not a valid break. Price already came back there, did its thing. Price came down here as well. It's a QM hour. Price already came down here as well. Together, then we can see this clear sweep. Sweep. Then price broke out this previous high, came down again, broke the second high. Now, why are we not using this guy? It's pretty simple. This guy is just too far away from the PO high. I hope I'm actually making sense. I don't want to sound like I'm saying too much, whereas all I'm saying is very, 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 very simple.
I don't think I've done anything other than
right? But let's do this one again. Let's do this one. Look at this cell here.
People that I should avoid.
Look at this cell that happened
Although it's
here.
not like he not advised me rightly. He said,
This is pretty simple, right? This is what you want to see all the time. You want to see a shape of the previous eye. You want to see a break of structure, right? Then you want to see this again, price breaking structure again. So that means you expect this eye to be protected, and this one is now the structural liquidity, yeah?
So,
which is simply like this.
From January,
a shape of this eye, a break of structure, you have this, then you expect this to happen, right?
January, so now guys, I've lost about
and
looking for
in this scenario, you only have an order block as your PO high. You only have an order block as your PO high in this scenario. And let's look at this. Yeah, from this low to this high, right? Your order block is inside this zone. This one is almost at 50%. So that makes this guy a very nice entry. Sell entry, you cover the high, give it enough space, and then you do a 1 to 3, or whatever target it is you want to target. Whatever it is your target is going to be. The same thing all the time. The same thing every day.
Very effective,
and then
very quickly, or which would even sell you out a lot more. So you need to be able to focus on one thing.
Boom, you have it.
Do it well.
Boom, you have it, right? It's pretty much just adding everything together, trying to understand the swing structure, your actual swing structure, your liquidity, and then the entry model. I was able to add those three things together, the rest will come easy, right? You need to merge those things together and understand how the three of them work, then the rest will come easy, which is telling the story. So you don't just, turn to someone who will just see a setup like this and just, jump on it, right? You just trade any setup anyhow, then end up losing money. So now let's tell the story. For the last time, let me give you guys still again for the last time. Let's use AED USD in this case. Let's use AED USD. The last time. Now we can all see this here. Let's cut price back again.
The tools, the service, or whatever you need to render to get money.
Now we can all see this here. You can see the first thing we wanted to, we look out for was this. Was the shape of this low, of this high rather, then the break of structure. Now we have another break. So that makes this guy protected. That makes this low the target, right? And what do we have? What's the next thing we want to look out for? Structural liquidity. And this is obviously the structural liquidity here. Look at the Fibonacci 2. It's directly on top of the 50%. And where is your POI? A POI basically, you don't have a QMR because this guy, there's no QMR right above this guy, right? So that means the only POI available is the order block right here. That's the only POI available, and then boom, and then you have this as your entry. Then you target whatever target it is you want to have,
wherever you want to find yourself.
And you have it. The price come back, of course. And then yes, you have your trade. And that's it. Price came back to the order block, got structural liquidity, and boom. Now, how do you tell a story, right? How do you know which zone to actually trade from? Yeah. Now let's get to that. Let's do GBP USD as an example. Now this is top-down analysis. Let's start with the daily time frame. So on the daily time frame, or let's start with the weekly, because I know I tend to look at the weekly time frame to tell my story. So on the weekly time frame, I want to focus on the current swing on each time frame, yeah? The current swing. And how do you know a swing? The swing basically is when I can see an obvious break of structure, obvious transactional liquidity. The obvious ones, I want to focus on that particular one. The obvious ones here, you can see sweep, So now what can I see here? I can see this guy. This obvious transactional liquidity. So if price is taking out this low and price is transacting, and I can also see this as well. Look at this. Okay, so if this is happening,
do you know how terrible it is to run a real estate company down?
What does that tell you?
I don't.
Me, I'm being okay. That means GBP/USD is bearish on the weekly time frame, right? In this scenario here, price reacted from this QM
Yes. Because
the price is bearish, right? Because price will take out this high. That means GBP/USD is bearish, and then originally we all know that price needs to come back to where this zone here. There is money here, right? Prices will come back to this zone. Okay, that makes sense. And if price is currently inside this zone, that means price is currently in the discount zone, yeah? That means price is currently in the discount zone. Okay, that makes sense. So that means I want to look for buys for price to come back into the zone. Please pay close attention. Please pay close attention to this.
So
now you're able to see something like this. Although I'm focusing on this current swing, you can see I'm focusing on this guy right here is what I'm focusing on. This guy from here to here, right? I'm focusing on this guy. So able to know that, okay, that means price is coming to this zone. Now, if price is coming to this zone, where is the structural liquidity? Now, what is structural liquidity? It's the last high before the main high, correct? Now, let's take out this guy. Where is the last high? Can I see any last high? I can see a bunch of highs here. And obviously, this is the last high.
One step at a time, then using little to get more.
It's obviously the last high.
To get more.
Right?
You understand?
Before this eye.
I showed you. I said these are the difference.
Even though I expect this eye to go, but still, this is the last eye before this eye. So that means I expect price to do this.
As long as the business has a structure.
Since price is bearish, price should come back into this zone and sell. Okay, since I'm expecting that and price is still in the discount zone. Now, on this weekly time frame now, this is my PO high. This is my sell PO high. After all, that's what I'm just anticipating, yeah? That's what I'm anticipating. So that means this is my sell POI. This is, you can see this guy here. That means that's my sell POI. That means this is my sell POI and this is what I'm anticipating. Okay. Then that means I want to look for buys into that zone. Now, looking at the current zone again, what do I want to look out for again? The same thing. The same thing over and over, right? The same thing. And what's the current zone I can see? What's the current swing I can see here? Because I'm looking for buys. Remember, I already have the anticipation that price is going to buy into this zone, right? I'm already anticipating that price is going to buy into this zone, right? But that means that for me to buy, I must see another swing structure that will actually go into that zone. Now, what am I looking at again now? On this same weekly time frame, I can see price created a sweep of this low. Okay. A break of structure. Okay. Now this is, I have this structure here. I have this swing structure. Now this is the weekly time frame. I don't have to bother if there is structural liquidity or not. I don't have to bother, right? All I have to do is just look out for the POI. Now I understand that, okay, I've seen this swing structure now. I expect this low to what? Be protected.
What you don't plan, you can't exactly.
Now I have a swing structure, a buy swing structure. Then what is my next step? To look out for my PO high, my point of interest, where I expect price to come back into.
if you need a proper
then I will have, you can see this last bearish candle that price swept.
You just need to.
That's my QMR.
For everything you want to achieve, always write
right? Basically expecting price to come back into the zone, then I buy. Now, I already have this anticipation again, and okay, I'm expecting that okay, price will come back into the zone, then I will buy. Okay, now before price comes back into the zone, what do I want to look out for? The same thing over and over, the same structure on the lower time frames to sell down into the zone. Now let's see.
So that I can really
sell come as low as because now I already have an anticipation that okay, price is expected to sell into the zone. What do I want to look out for? Only sells. Only sells until price gets into the zone, yeah? Now I already have a target. I already have something I'm actually looking out for price to do. An anticipation, yeah? Let's use the 1 hour time frame. And let's cut price. Let's just
it's not a full time for you.
Take out price.
So for you that's not a full time, what else are you doing?
Now before price came into the zone before price came into the zone, I want to look out for the same thing over and over for sales only. I want to look out for sales only, right? The sale started from here. Was there any sell entry for us? Actually, no, I can't see any that fits what I want to see here, that fits my plan. But then within these sales, you can, we are actually looking for sales. You can as well see your buy entries. This buy, I caught this buy, pretty sure. I caught that buy. But you're actually looking for your own sell entry, and I think I've seen one. Now remember, you're really looking for sales. You're looking for sales until price taps into this zone here. You're looking for only sales, right? It's pretty simple. You want to look out for the same thing over and over every day. Now you can see this sweep, you can see this break. You're not actually no longer bothered again, but the price is bearish, right? But now you can see another sweep of this previous high. You can see another break. You can see another break, right? Now from here to here, where is the last high? You can obviously tell that this is the last high here. That's structural liquidity. And where is your POI? What's the closest thing to this POI here? You can see this guy that was taken out. You can decide to use the old candle itself.
I can, yeah, actually.
Decide to use the old candle itself as a POI. Or the wick. And this is the wick here. That long stuff here, that's what it's called, the wick. But you can start to use the old candle as the POI because that's the last bullish candle before this bearish movement here, because that was the one that price swept, the one that failed here, obviously.
Okay, that's fine.
You can start to use that one as your entry. You cover the structural liquidity of inducement liquidity, of course.
I think it makes sense.
And then your target, whatever your target is going to be,
right? I think it makes more
but
sense.
you're looking for only sales until price taps into what? Your zone.
Okay.
I think price even did tap into this guy. Did it?
Does that make sense? Because if you are not making
Let's see.
money, how do you want to invest
This
anyway?
call is getting too long. That didn't really want that. But let's just see. You're just looking out for only sales until price taps into that zone here.
I'll give you a quarter to
Back to the 1 hour time frame.
That makes sense. Exactly. So add me to your plan. So when you're writing your plan, then you write my name with it. Don't worry, my name is.
Now you can see this.
But when you're
So you
writing
can
your
actually
plan,
decide
just
to just
add my
hold
name.
your sell
Your plan
until
is
price
like
taps into this
Ayobami,
guy.
Akindipe. So this is it.
If you see the same thing again, you take the same trade. I think I can actually see the same entry here again. And it's pretty simple. What can I see here? I can see a sweep of this low. I can see a break. Now remember that type of liquidity that happens here
And I can bet you
before the break of structure. That's what we had here. That's what we had here, right? That is what we had here. And then you said that your structural liquidity.
It's not yet.
The high that was taken out, the week as your entry.
Like anything worth doing.
Now you see how you're able to build the story, you're able to understand that okay, you are looking out for sales only until price taps into
photography, you feel like you're not making money.
this zone. Looking out for only sells until price taps into this zone that you start looking for buys. Now, how do you start looking for buys again? Until you see a sweep of the previous low, you see a major break. Boom.
We do for a living.
A major break and the structural liquidity, of course. Then your entry, your POI comes next. Right, your POI.
We all have the mindset that everything.
The beat this last guy on the 4 hour, it makes a lot of sense. But I hope I'm actually making sense. I don't want this call to be so long and then you guys don't actually get anything from it. Right? I really want to make it worthwhile for you guys. But this is the whole point here. You're able to build the story, right? Understand that, okay, from the daily time frame, what am I seeing?
At all times.
Now, the first thing is, from the weekly time frame, you're able to build a story that, okay, this is a swing structure, right? This is a sell swing structure. This is sell swing structure, right? Now, you're already anticipating price to come into this zone. You have been waiting for, you're actually anticipating price to come into this zone. Now, before price comes into this zone, you need to buy. Because price can't just get here all of a sudden, right? That means that price needs to buy into this zone. Now, if price needs to buy into this zone, that means you need to look for another structure to buy into this zone. Now, for price to buy into this zone again, you look for the same structure, and then you know that this is the weekly time frame. You can't just place your trade like that. You have to come lower again. On the daily time frame, you can see a swing structure again based on this sweep, this break, and you want your price to tap because you can't just place your buy position here again because this thing will be too long. It will be too much. You know, the drawdown. I mean, one candle actually takes a day. One candle takes a day to form. This is daily time frame. One candle takes one full day to form. Yeah, that means I don't have to like wait. That means this is my POI confirmed. Yeah, that means immediately price taps into this POI, I can as well just go to the 4 hour time frame to look for my confirmation entry. And what's the confirmation entry? This still the same thing. Structure, liquidity, then your POI as the entry. I know one session won't actually explain all of these things, right? But this will be the only recorded session on the top-down analysis. Probably our next call, I will still explain top-down analysis. But for now, I think I will just put a stop to it for now, yeah? That's going to be all for now. But then, you need to understand that this zone, you can actually sell from where? This premium zone. This premium, yeah? That means you can still look for sales into this discount zone. And originally, this is also premium, yeah, so that means you can still look for sales into this discount zone. Then you start looking for buys. After price taps into your POI, you start looking for buys and buys. Now, this is the reason why you see price came into the zone and started buying. If I show you guys my PC from February this year, I've had this POI since February. Now, to show you guys, yeah, since February, yeah?
There is basically no small business.
Exactly. I've had this POI since March. When did it form? It formed in March, yeah? I've had this POI for a very long time now. And I can tell you for a fact that I caught this sell right from here.
I don't think there is really
right from this zone. I caught this sell right from this zone. Right? Even this sell itself, after price took out this inducement liquidity, I caught the sell. This buys as well. You see, I've been trading the GBP USD profitably since February this year. But then I will still explain again, right? I think some of you don't really get it yet, and which is very much okay. I'll drop the recorded version later today. You guys can also as well go through it. Then we will still have a session again, another session on top-down analysis. But putting it all together, I believe you guys get that now. How to put your structural liquidity and POI together. How to use everything to your advantage. So that means if you actually, okay, let us assume you just spot a good entry now, and you still don't understand top-down analysis yet. That means you just spot something like this now. You just spot this. You can as well just tell yourself that, okay, that makes sense. This is structural liquidity. This is sweep, a break, structural liquidity. then your POI,
just go in like you are
then this would be your
going,
POI, right? You're able to jump on the trade
You can't be overthinking things.
without thinking or without doing any other thing, yeah. And then you have at least 60% chance of this working out without knowing where price is coming from. But
now you need to put
for the betterment of your trade, right, to make your trade a little bit better and then high probability, it's a lot better to know where price is coming from. It's a very good thing to know where price is coming from. So you don't just jump on setups, on every setup, and then you end up losing money, right? But still, you can, do this setup thing and all that and still make money regardless. But to just make it better, to make a trade make sense, the top-down analysis is very, very important. So that should be the end of the call, the session. Let me stop recording. But I believe you guys are able to you already know how to put everything together now. The only problem you guys might still have issue with is the top-down analysis. It's very important, but I'm here for you guys anyway.
Always find a way to scale. Always find a way to scale.
Hi guys, this is Dax.
Always find a way to
and today I'll be explaining the 10 trades rule.
I really think we do need.
If you follow me on Twitter or probably WhatsApp or Co, you would have heard me talk about the 10 trades rule. And what does the 10 trades rule do for you? It basically helps you cope the fear of losing. When I say the fear of losing, I mean the fear of losing trades. I know as a trader here, after doing the whole analysis, right, we tend to, some of us are still scared to execute trades because we are scared of losing money, right? That is one major problem traders have. And when the trade eventually goes in your direction, you start regretting. You start asking why didn't you just execute the trade, right? I know it happens to a lot of us, and that is mostly because we lack confidence in our trading system and also in our own trading skills, right? So that is why that thing happens, right? So this 10 trades rule will help you cope that and also increase your confidence as a trader, right? It will also help you trade better, more like help you make much more money better, because I see a lot of people say you have to risk 0.5%. They talk about risk management. They say you have to you use 0.1 lot size and all that. But I need to tell you that actually isn't risk management. Risk management doesn't mean you have to risk too little. Right? We are trading here. We are all trading for freedom, and we all know what freedom really is here. Freedom, it doesn't mean you have to earn little. I mean, if you've known me, you should understand that as a trader, I would never recommend anyone to. I mean, you should always scale up, of course. You need to scale up at certain points. You don't have to remain in the same position always, right? If you were making $100 last week, you should at least try to, up your game again in the coming week. Just like that. That is who I am. And that's who I've always been. Right? I always want to do better than I did last month or the previous month or the previous week or the previous day. That is something that, kept me going. So yeah, I'm not here to tell you that you should risk 0.1% or 0.5%. I'm not here to tell you that because I feel it's just going to waste your time. Now, if you actually take 10 losses in a row, you can just skip this video. You don't bother watching it. But if you can go back to your trading history now and realize that you cannot lose 10 trades in a row, then this video is for you to boost your confidence and help you earn more, right? And also help you pass that challenge if you trade a proper account, help you pass it faster, easier, without stress, without fear, and also help you make money on your live account. this 10 trade rule is going to help you. Now let's move into it. So this 10 trade rule, I already explained what it does, and I'm gonna make it very, very quick. Now, for instance, let's assume you have $100,000 account, $100,000 trading account, right? And on a prop firm account, it is, we are allowed to risk 10%. That's the overall drawdown, 10% overall drawdown. Now, how do you want to trade that? For me, based on the 10 trades rule, it tells me to break down the account or the overall drawdown into 10 trades. That means if the overall drawdown is $10,000,